What's good, traders? Trader Sage here, and today we're going to talk about something that I know be really jamming y'all up, and it is thinking in probabilities. Thinking in probabilities. What does even thinking in probabilities mean? We're going to answer that in this video. In front of you, this is the chart for Solana. Solana, I like to say it like an Italian sometimes. Solana. And in front of you is the current price. Today is May 19th, 2025, and I took a trade also, and I got clapped. But let me tell you why I got clapped. All right, so pull up Discord. So I was looking at this key level right here on Sol that was tested. See, tested 1, 2, 3, 4, broke. Retested resistance, and quite honestly, I was up around this time and I could have sold, but I was busy working on something else, so I didn't. But I was like, okay, well, missed this trade, but if this breaks, I'm in these buys. I'm in for sure. I'm trying to say it like Doyle, for sure. And I would have been in them buys, and I was in them buys, but I got clapped. Why? Because my stop loss was too tight. And it's the same stop loss I've been using for at least my last 6-7 trades. But understanding that there are times where the market will just get this close to stopping you out, and it doesn't stop you out. It just reverses. In this case, my stop loss was too tight. And here I'm just saying that I re-enter my trades. This is a Discord, by the way, free right now. For now, if you want to get in there. But for my day trading position size, I usually have around 80 cents. 80 cent stop loss. If you're an FX trader, that's like 8 pips. So think 8 pip stop loss, which sounds wild, but please keep in mind these are completely different asset classes. Like 10 pips on there is actually quite a good amount of room. That's $1 move. So that's a $1 move on Solana, which is about 100 ticks, I think. So I was doing about 80 cents and it's been working. And then there's a one time where it didn't work. And there's multiple times where it doesn't work, but it didn't work in this circumstance. And 100 would have worked, which is a dollar. So 10 pips would have worked. And you can see that the drawdown was just like that, and I had just got stopped out like right here. So it'll be better if I put it right here like this. So as you can see, I just got stopped out right there, and then it reversed and it went and smashed TP. So if I had just 10 cents more, which honestly, if you're trading crypto, you really should anyway, because the price differences on your broker versus something that you're looking at and analyzing price like Coinbase can be completely different. So you really should give it a nice buffer room, because like I trade on Blowfin and there's like a 20 cent difference versus on Coinbase, which that can just be enough to stop you out of the trade. So you don't want that to happen. But thinking in probabilities means that there's an infinite number of outcomes that could happen at any point, at any place on the chart. And what you simply see in front of you is the manifestation of just one of those outcomes. Just one. That's the bar right there. If you made it this far, congrats. You have a much longer attention span than the average person. You're going to make it. Okay. But what you're seeing in front of you is just one outcome. Just one, and you don't know the other outcomes because you only see what happened in front of you. So what does that mean? Well, that means that if I can get my path tool and make sure everything's on screen properly, and I'm even going to turn off my indicator that I'm working on, wink wink, is going to be coming soon to y'all. So this is my indicator that I made. All right, so grab the path tool. So right now the price could come down and tag me in, right? It could, obviously it's going to do some shit like this. It's going to staircase down because it has to make a downtrend and tag me in. So it could come here, it could bounce, and it can go flying straight to my TP. It happens. I promise you it happens. I got many screenshots of it happening. Literally, it just wicks you in, and the same candle hits your take profit. It happens all the time. Okay, that's one outcome. Or price could not even trend like you see here it did. It could just drop straight here, tag me in, bounce. It could double bottom, and then they could start trending back up and then hit TP or whatever. That's another outcome. Okay, thinking probabilities. This is just two. I'm talking about an infinite number of things that it could possibly do. So moving on, price could drop, whatever, come over here, come all the way close to stopping me out, like within a breath, and then come back up here, blah, 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 and go and hit my TP. Okay. That's what thinking in probabilities means, that there are so many different variations of what price could do once it gets to this level, that anything could possibly happen at any point. That means that a losing position could actually flip and turn into a winning position as well. Understanding that anything can happen, you have to understand what are the principles of trading when it comes to RR and probability, or if you want to combine the two, you can say win rate. For sure, the closer that your take profit is to your entry, the more likely it is that you're going to win the trade. Okay, so if you have a position here, you want to take buys at a support level because blah 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 blah, you taking buys at a support level. If this is your take profit, which is like a negative versus reward, which I've talked about in the past, in my past videos for people who like to trade that way, the probability of you winning this trade is super high, way higher than if, you know, for my trade, like over here. The further that you want the market to go, to take you out of the trade, the less probable it is. I'm grabbing the wrong thing now. Sorry. The less probable it is, but it doesn't mean that it won't happen. It's just less probable. This is more probable to happen than this. Okay. That's just trading principles. So people who have really high win rates, a lot of times their TP is something like this. It's just negative versus reward. Boom, boom, I'm in and out. Okay. You have to maintain a very high win rate to do that. Nothing wrong with that. Okay, now that's to take profit. But it works the same way for your stop loss, in that the further your stop loss is away from your entry, the less likely it is that you're going to get stopped out. The closer your stop loss is to your entry, the more likely it is you're going to get stopped out. If you don't get stopped out, your reward increases. So if you have a really tight stop and you have a really big position size, you could easily go for a 3-to-1 here. You see how this changed my trade to a 3-to-1? But the trade-off is I'm more likely to get stopped out of that trade for sure. 100% for sure. Especially if my stop loss is below the average true range of whatever session that I'm trading on, or whatever I'm observing the price on. So this is the 15-minute chart on Solana. This is my indicator that I've built that tells me the average true range right now. The average true range is 1.112. You probably can't really see it because I have this thing that tells you what pair I'm looking at, which is Solana up there, so it's cutting off some of my indicator, but I'm still working on stuff. But the average true range right now is 1.112. My stop loss was 80 cents. So it's below the average true range. And for me, I like to, for my day trading positions, I like to make my base hits as easy to hit as possible, because I'm here for the long run, which is just consistency. So that means I'm looking for something that's moderately probable and the outcome is slightly more outsized. So it's not a 1-to-2, it's not a 1-to-3. That's just my first take profit. So it's around a 1 to, with this, if I'm looking for let's say 13 pips because I trade quarter levels. And I'm just looking for that slight entry into that next range, which we just got here. That's a 1 to 1.3. So I'm just getting like just a slight bit of profit more than my stop loss is. But because I have multiple factors, confluences in my favor, if I continue to take high probability setups, I'll have a higher win rate. And because the distance that I want the market to travel is fairly easy to hit comparatively towards if you were like swing trading where you need the market to go super far in your favor, I can consistently stack base hits. So thinking in probabilities means that it means what understanding in the market, what is more likely to happen, what's easy for the market to do and what's hard for the market to do, and how do you position yourself in the way of things that is easy for the market to do consistently, so you're consistently on the right side of the market more than you're on the wrong side of the market, and letting the probabilities stack out and play out in your favor. Consistency creates the luck. All you have to do is show up every single day, come to trade, put your game face on, come to trade. Don't be trading with emotions. Just use your understanding and experience and your logic in the market. Set the trade. Forget about it. If you scale out like I do, this is just the first TP. Second TP is up here somewhere. Scale out. Okay? So that's just one aspect of me talking about thinking in probabilities, and I hope that helped. I didn't want to make this too long. If you're interested, I have a book that I just written about thinking in probabilities that can help you as a user manual anytime that you're getting distracted or hemmed up. Like this is like trading psychology right here. You need to have this on your hip. It's like your trading Bible. You need that. I'm telling you. All right. So link is going to be in the description. If you found any type of value in this video, please drop a like, a sub, hit me up on Instagram. We got an active and lit community in the Discord. You know, people are in here chatting. We're talking about win rates, talking about how to help people get better. People are like coming together to help each other. It's really cool to see, man. It really is, man. I really appreciate the people who've been in there dropping knowledge bombs and helping people. If you want a book like this, I'm telling you, it's good. Thinking in probabilities, link is in the description below. And I'm pretty proud of this one, man. But yeah, I'm gonna see y'all in the next one. Peace out.